So today, accelerating the on-chain economy, we have a very diverse panel. We have, I think, a lot of names that speak for themselves. So instead of going through all the introductions and everything else, I think we're going to allow that to happen somewhat organically, as we have so much content to go through and so much to say. And we're going to really dive into this deeper. When we talk about accelerating the on-chain economy, we know what's happening, we know it's progressing, but we all know it could go a lot faster. We also know that there's a lot of macroeconomic forces that might be pushing this a little bit quicker, and we also know that there's variables that we can utilize to influence this and make it achieve what we want to actualize in this on-chain world. That said, what I'd like to kind of start with, and we'll go with you, Matt. I'd like to talk more about the current macroeconomic trends that are otherwise influencing and shaping this on-chain economy. And Matt, so you recently argued Bitcoin would thrive in an inflationary environment driven by the increasing global money supply. So can we go a little bit more broadly on that? And how do you see the macroeconomic factors like inflation or liquidity crises affecting this broader on-chain economy? And in that respect, do you feel that institutions are starting to more seriously view crypto as a result, or is this narrative just still a wishful thinking?
Yes, so I think there's still a Bitcoin versus everything else element to it. And one thing is that I think that Bitcoin holds a different place in both retail and institutional portfolios. And so like looking at like someone's risk asset allocation, it's like, yeah, you have your equities portfolio. You also have potentially what you consider to be like your longer tail risk assets. And that's kind of your fixed allocation of risk. And Bitcoin, for the longest time, has been in that side of the portfolio exclusively because it was high volatility. It still somewhat is in the grand scheme of macro assets. And then that's generally going to be pretty correlated to how much extra money do you have to invest and to trade. Like truly trade, not invest. What am I able to lose? And then through time, I think that people are starting to see the real value of a scarce asset, and it is correlated to global money supply. If there is inflation via money printing, people have more money to put into their risk portfolios. And all of a sudden, we're starting to see volatility compress through time. I mean, right now, front-end volatility is less than 40. It was, 80 this time last year. That's a major change. And through time, as it becomes a less volatile asset, I think it properly will fall into the portion of your portfolio that is there for like a true inflation protection, similar to gold. Conversely, the rest of crypto, I think, is viewed still more like a risk asset. Some of the tokens are traded. Some of them, I do believe, people treat like a venture portfolio. I'm going to allocate money to a protocol I believe is going to do great things, build new products, et cetera, ship. And I think that it just holds a different place. And so if the economy is not doing well, I think those are the first places people yank money from is the riskiest things, the longer duration stuff. Conversely, I think as it becomes a more safe asset to hold through time and those correlations maintain in Bitcoin, people will probably segment it differently.
I want to actually dive a little deeper into that. I'm going off script. No, sorry for that. But I want to talk a little bit more about the scarcity element and how certain political elements, there's a unique dynamic. I suppose you could say that the US is kind of leading the charge with regards to like better acceptance of digital assets. There's ultimately the scarcity economic models. Do you feel like the current political regime and what the domino effect is happening, say with, Thailand doing capital gains waivers, Japan working towards deregulation, do you feel that that's instilling confidence into the larger institutions? Do you feel that that's otherwise, okay, government's doing this, it's the battle for scarcity at that stage, and if they don't jump on, then they're going to fall behind. So do you feel that that influences confidence?
Definitely, and I think there's a major game theory aspect here. I'm going to avoid diving too far into that since I'm probably going to defer to Jordi on the game theory, but I think ultimately everyone was previously scared to put crypto into their portfolio institutionally because they thought it was a career risk. Now I think it's starting to become risky to not have it in your portfolio. It's getting more generally accepted, regulatory clarity is coming, but at a sovereign level there's a bit of a race to accumulate. Like I think one of the reasons we don't see these splashy headlines for accumulation is that most other countries are behind the ball, not only accumulating for themselves, but in letting their people accumulate. And if you do end up in a world where a few countries and most of their citizens are participating in something that has generated a lot of wealth and continues to basically remain such, you're going to create a massive disparity. So I think they're accumulating quietly, very concerned that they're behind the ball, and that is kind of shifting the dynamic.
Very good. I fully agree. And Jordi, I do want to toss that over to you. Given your specific like global expertise, how do you see, for example, the any specific global or like economic developments that are influencing this crypto adoption, the institutional adoption? Do you see any specific thing that you feel is making a big impact right now?
The biggest impact, obviously, this year was this like trade war that got started, and I live in Asia. Certainly, like there's a lot of U.S. but also Chinese influences in Singapore, and when that started happening, it's a huge deal. I think crypto is this neutral thing in the middle where it doesn't matter which side you're on, especially now with I don't want to say I'm like a dollar bear, but it feels like a period where people are internationally questioning holding U.S. Treasuries versus something else, and that something else is looking like crypto. Could be one option. Talking to the local sovereign wealth funds. A few years ago, when I would bring up like, hey, why don't you have gold? Why don't you buy some Bitcoin? They'd be like, oh, it's too small. I'm like, what do you mean? You want to buy it expensively? Like you don't want to buy the cheap Bitcoin? You want to wait until it's up? And they're like, yeah, we can't allocate our trillions of dollars in something that's like so small.
It's like the lemonade stand where it shows it at the high price and it's all lined up.
It's actually exactly like that. And like we're in this like dominoes every year, like a bigger kind of institution falls, and now like we're at these big slabs where we're like pretty far in, and like the next dominoes to fall are these massive sovereign wealth funds and these like huge institutions. And when they start buying, like it's just like a programmatic thing. I mean, we've already seen Mubadala buy like the BlackRock ETF in the Middle East. Once this starts, they don't stop. They just kind of like tick along. So once you have that constant bid, especially on Bitcoin, the question is what happens to the rest of the assets. I think we're seeing this now with public equities, but like when people can like fit something into a story. Like if somebody can take Ethereum and just like fit it into some like institutional story, they'll just buy all of it, and just BlackRock will adopt it as like their little child and just make it whatever they want to sell. So that's pretty exciting. I mean, I think there's going to be a lot of that going on, and I'm very bullish the accelerating on-chain economy right now.
Absolutely, nice callback. To that, I'm going to have my inner nerd come out for a bit. I'm a math guy, but I'm also a huge nerd. So when I think of like what you touched on earlier about how the war, for example, impacted trading, impacted price, I always look at charts, and it's almost like I feel like it's almost like Neo looking at the Matrix, right? Where you can almost see like the emotional battlefield, like mathematically represented with the chart, right? So do you feel that the institutional adoption, like the more global macro, is otherwise compressing some of that volatility to give more confidence? Or do you feel that otherwise these institutions, as they're adopting, are influencing it for the better in the long term?
Definitely the volatility. I mean, it's definitely a self-reinforcing thing. I think the key moment was as like NASDAQ, everything was crashing. I publicly was like very bullish, posting around like 78K Bitcoin. That ended up actually kind of being the low that day when Trump kind of backed off. I think a lot of these hedge fund managers I've been seeing, like they noticed that actually like it really held up well compared to what was happening. And maybe it is like a paradigm now where you don't get these like 60% kind of 3 times downfalls on the downside. And I think it is this kind of bid, this like stabilizing bid.
Until he tweets about tariffs again, right? So.
Yeah, but like, I think equities can still underperform. So that's the key thing. They're always looking for relative performance. And look, like going forward, I think we're going to overheat. Like we'll get into this like public equity stuff. It feels to me like a massive Ponzi is happening. Like, why is everything trading above NAV? Like this obviously doesn't last. We saw with Grayscale where it was like for a long time above, and then it was like under, and people are trying to get out, break the piggy bank. Like there's all kinds of stuff that's going to happen. We're obviously like very early innings in that category.
It's almost premeditated, you would think, right?
I think everyone who's like an astute observer kind of feels like this is going to be what's going to cause the next, temporary like mini bear market. It's not going to be a long bear market, but we'll have a big correction. That's the one thing on the horizon that I worry is definitely not sustainable.
I always use the metaphor, you can shake up a bottle of Coke, the carbonation stays in until you release it. So at that, it's only going to be more pressure and elongating this curve. Over time, we'll see. I think that hopefully we're in for a longer bull cycle as well. Could keep talking to you all day, but I do want to hand over to Vanessa here because I know that she also has some wonderful insights. So Vanessa, you co-founded the Ethereum Enterprise Alliance and have been really at the helm of driving this institutional or enterprise adoption and leading the charge, one of the torchbearers. Let's fast forward to now, where we're at. Do you feel that enterprises and institutions are embracing on-chain solutions at scale, or do you feel that there's true utility to that coming in at this point? And just to further that a little bit more, do you feel that there's any hurdles that are preventing it to achieving the scale that otherwise it could?
So I just want to take a step back. When we created the Enterprise Ethereum Alliance back in 2017, who was there? JP Morgan, Fidelity, Santander, all the banks were there, and they understood, the transformative power of the technology. What happened for a couple of years is that they were all experimenting with private blockchains, and obviously not much was happening there, and they couldn't do anything because of the regulatory constraints that they had. Now there's the realization that doing private blockchains is kind of a waste of time. They need to leverage public blockchains in order to leverage interoperability, composability, etc. And they're all really trying really hard to do that. There are still some constraints, and hopefully in the US they will be lifted with both the stablecoin laws and the market infrastructure laws. But these large banks have a lot of constraints because of their existing regulatory regimes and obligations. But we have seen, I think, with stablecoins and RWAs, a real excitement and a real opportunity for all the institutions to really dive in. So whether it's tokenizing existing asset classes, funds, or stablecoins, I think that's really the two Trojan horses for them. And they have the ability to operate. And they really want to do much more. I think we're in the middle of a 20-year transformation of going from a legacy system to a new technology system that is superior. But it's going to take time. It's not going to happen overnight. And we'd see that tokenization is starting, but it's still really small, in my view, right? And the only thing we can tokenize right now is like liquid assets, which is really the good product market fit. Then, if you want to tokenize real estate, what's the added value really here? Until, it's not going to add additional liquidity until everyone shifts to that back end and everyone can trade in tokens in a native way, and it's not just a representation of existing things. We're still going to be a little bit stuck.
Well, we're creatures of habit, and we're always at this stage where how much friction needs to happen to force change, right? So do you feel that we're at the stage currently where the opportunity cost is at a stage of mandating this change? Like there's always a price to cost to benefit, right? So do you feel that currently with transitions to these new and leaving the antiquated legacy systems, is there enough dollar there to motivate or mandate at this stage?
I think we're not there yet. I think we're in a good place in terms of having an opportunity to buy the asset class and propose it to investors. We're not completely there in terms of really the back end and the native tokenization of things, right? So we're just still in the interim phase. We had the first interim phase with the private blockchains. Now we're at the second interim phase with representation of existing digital assets that are being tokenized. And then there'll be hopefully the third phase where it's native tokens.
Very well. Let's hope we accelerate, just to tie back. And Matt, I want to dive back to you. And Omar, I'm saving you. I'm ready for the skepticism to come, right? Considering your institutional trading perspective, do you agree with Vanessa's assessment on this? Or do you feel that there's anything else holding back this full-scale institutional adoption, or anything to add on this?
Yeah, I definitely agree with Vanessa's view, and I think one of the biggest things holding it back is basically some sort of atomic prime structure. Like it's still very disparate where you can get capital and where that capital is able to basically get deployed against these real world assets. So you can go to individual protocols, borrow against something, lend, et cetera. But until you get to a world where, similar to how it works in traditional finance, everything that's in your portfolio can all be cross-margin, it's really expensive to do it in the grand scheme. Capital doesn't flow efficiently through the system. That problem probably gets a little worse at the beginning if every bank decides that they need to hold on to all the yield and make their own stablecoin. Now you're going to need an interoperability layer between those as well. At some point, we get to a world where your perp dex positions are hedged against your spot positions elsewhere, which are hedged against your home if you're really deciding to take like a HELOC on chain. Like that, eventually you get to that place where everyone can, in a trustless way, fund the capital. But I think at the beginning, if you want to be like an early adopter, you're doing it because it's cool and interesting and a fun tech problem, but you're probably paying up a little bit. And that's really tough because people don't love paying to have fun. I think they'd rather get some value from it instead.
Absolutely. And I could dive deeper into that. Actually, maybe we'll tie back to it. That said, thank you for your perspective on that. Omar, I've learned a bit about you over the last week. So your content is very good. I appreciate your opinions and your stances. You were recently actually critically analyzing Circle's IPO and just questioning the general financial stability of crypto. So given that stable coins are kind of like the underpin of this economy, what do you feel specifically distinguishes a fundamentally sound crypto financial model from a problematic one? And do you feel that there's key factors or indicators that banks and issuers should demonstrate to genuinely prove their long-term economic sustainability?
Thank you for the kind words, first off. But on Circle, I actually very much like the business. I just struggled with the valuation, I would say. Yeah, I think the business is structurally sound, and they run it as institutionally as you can, and they will be compliant with all of the regulation in the U.S. as it all comes to fruition in the coming months. I think just on this topic of what's sustainable versus what's not sustainable, I think historically a lot of crypto native projects have used tokens and token incentives as a way to subsidize their ecosystem without any real value accrual back to the token. And inherently that's just unsustainable, and over time it's just a perpetual stream of selling without any offsetting buying, and it's led to a lot of people losing a lot of money and a lot of these protocols not necessarily being around for years and decades. And so I think that is the nexus of my issue with some of this stuff, which is it never really has a chance to succeed. I think on the flip side, on the equity side of the house, there are some really good businesses, and fundamentally you actually need to build a sustainable business model or be able to raise into that business model to sustain it. And so somebody has to have some read through as to, okay, this makes sense if we subsidize this operation over a period of time, then over time it will gradually become self-sustaining. And so I personally really like that. And it's more so from a longevity perspective, because I do really want to see the projects, whether they're crypto native or whether they're on the equity side, be here for the decades and years to come. And I think, this Circle IPO is actually a great sign for the industry. It's giving a whole range of publicity to crypto, to stablecoins, showing that there's business models that exist, that do make money, that there's real people behind them, that there's disclosure, that there's transparency. And I think a lot of that stuff's really, really good for the industry, and it helps move the space forward. And then it also incentivizes a bunch of people that see a company trading at $55 billion or $60 billion, depending on the day, to come in and compete for a piece of that pie. And I think overall it's really, really good to see generally.
Do you see a world where this could have been done better? Because I understand where you're getting at in terms of maybe this wasn't for the greater good in that respect. Do you see a world where it could have been done better in a way that would have been more supportive of the macro economy of crypto and so forth?
Just to understand the question better, the structure of Circle the company, the way
the IPO,
tokens
for example, would there have been a way that could have gone better, or a way that you feel that otherwise would have been more sustainable?
I don't find anything structurally unsustainable about it, to be honest. I think the traditional IPO process is a full-blown marketed process where a company takes their shares out to Wall Street, they go market their story to a series of institutional buyers. Those buyers reflect interest into an IPO book. The company ultimately ends up deciding whether or not they want to accept that price for those shares, a portion of which was primary, a portion of which was secondary, and then ultimately it's a transaction between buyers and sellers in a willing transaction that leads to a stock being traded in the public market. So I don't view anything broken about the public market process. could there potentially have been better read-through to what this stock would have traded at in the public markets? Potentially, but I think there was actually like a pretty informed opinion on both sides, given how much that name had traded in the private market. So I don't know. I thought it was like fine. I'm sure they regret where they priced it. That being said, it was revised upwards a number of different times through that process, and the original S1 was pulled and then refiled. But I think like overall, it's a pretty good process relative to, not to take any shots at anything in the crypto industry, but some of the way tokens launch in the crypto markets are arguably a lot worse. And so I think it is a good step for the equity side to see like, hey, there is a proper marketing process that you can do to solicit demand for an equity. And hopefully over time, we start to see similar processes play out on the token side.
Yeah, absolutely. And very well said. Thank you so much for that. Does anybody have anything to add what Omar was just sharing? Because I feel like that was so encapsulating. I don't even know if I have a follow-up. That's what, yes.
Nothing specific, just like these stablecoin businesses. It's interesting looking at the valuation compared to the FDV of the actual stablecoins, and sometimes they're starting to exceed. I mean, we saw this first with Ethena, where it was trading at like at some point like 20 billion, and there was like 5 billion of the stablecoin. And now with Circle, I think it's the market cap's exceeded how much USDC there is.
Yeah.
And it's sort of like, oh, the company that is like issuing the IOU, if they just took everyone's money and just kept all the USDC that everyone minted, it would be worth less than like the market cap. And which is just like something interesting to think about. It means that like the market is projecting that like their profit on this amount of money is going to be more than the amount of money that's there over time, obviously. Yeah, it's kind of fascinating.
Yeah, just to Jordi's point, like at one point it was trading at 60 billion. If you're to take the 60 billion market cap, turn it into cash, and then just go buy treasuries yourself, you'd make $3 billion at 5% rates, like as rough rounding math. And Circle's like net income is like 250 run rate of net income today. And so like you're talking about like a 13 times delta between those two numbers. And so like you're implying a ton of future growth. And at another point, relative to where it was trading compared to Coinbase, which obviously has a great deal there, you have to have some view that they're going to ultimately renegotiate that contract that they have. They're going to renegotiate a number of distribution partnerships, and USDC is going to be the ultimate currency for a lot of stablecoin activity globally around the world. And I mean, I think it's great for them. They should use the equity price as a way to do some strategic M&A personally, but I think like there's a lot of hopium, I guess, embedded in the price.
I'm a little bit less enthused about the business model and the capacity of Circle to grow in general because of the competition that's going to be coming from existing banks and other players. So yes, the pie will grow for everyone, but will Circle be able to keep this first mover advantage? We've seen a lot of like the crypto founders in the space have the first mover advantage and lose it pretty quickly. So we'll see.
Very good ad. And, just a second ago, Omar, you also touched on how the IPO process and everything, you don't contradict it, so to speak. Prior to this regime, I always had the concern that anything that was going to be fostering innovation in the United States would otherwise be squelched through fear or apprehension of uncertainty of what can happen if I'm going to do an onshore token launch or anything of that. I want to jump over to Jordi real quick and just ask you, because you talked recently about the Middle East and how they might be able to become the epicenter of innovation when it comes to cryptocurrency growth and so forth as a result of more favorable regulation. So as things are developing in New York and as things are here where it's a little bit, let's say, a little more stringent, right? Maybe that's an understatement. How important do you think that these regulatory dynamics regionally are going to be for accelerating the on-chain adoption globally? And do you feel that regions like Dubai are realistically going to be able to leapfrog more traditional, antiquated financial systems? And is there something that we could be doing more, or do you feel that there's a concern of us falling behind as a result of their more favorable environment?
I mean, look, it's always been interesting how there's the meat space where there's countries and borders and each one is like doing their regulation. And then you have, like the digital world where crypto is completely borderless, doesn't care where people are logging on the internet from. You can be using a satellite from Antarctica, it doesn't matter. And trying to do like crypto regulation in a country is literally antithetical to the substrate that you're operating in. And Dubai is the nearest to just like letting people do their thing. And so the alignment between crypto and the Middle East, let's say, is profound. We expect a lot of growth there. We've opened an office there. We're getting regulated with VARA there. I'm spending time there myself quite often. And it's just like so much closer to what crypto is, where, people are using Hyperliquid in the US, and then it's like, but are they KYCing or should they be? But it's permissionless, but it's It's like such a mess, and like it's all gray areas, completely gray areas. And the positive thing, of course, in the US is that the current administration has decided to, squash whatever the previous one was doing in terms of stifling everything. So I am optimistic for the US, at least for the next, till the next election, and hopefully like we get some pro-crypto person, but maybe we don't. Who knows what happens? From like a business standpoint, making the push to go like full all in on, let's say like US for Selini, let's say, you're just like worried what happens in 3 years, like if everything changes. So of course we'll expand in the US. We'll kind of take whatever opportunity there is here. But if you want to make like a 5-10 year business decision, a place like the Middle East, it just feels more predictable in terms of what the regime is going to be like.
I agree with that. I do think that there's more of an acceptance to it. There's less of a fear of, okay, if we do this, what could this develop to? There's frameworks, and even with ADGM offering licensing to certain blockchains, those things are the things that instill confidence, because the last thing you want to do when you're innovating and leading is develop something without uncertainty. And when you're doing that, there's no good surprises in business, especially as some founders have found in crypto. So Vanessa, I just want to toss over to you for a second as well, because you have such a global expertise as well. Do you feel that there's any other regimes that, or any other, could we say, countries that are currently poised or like making strides that you feel that they could be another epicenter, so to speak, such as, the recent strides we saw in Thailand with their capital gains waivers, and as I mentioned, Japan earlier. I'm curious your opinion if you think anything else is like well structured or well poised to succeed.
So I think the current legislation, for example, in Europe, has hurt a lot the region. So that's kind of like a place where we don't look too much in terms of investments, etc. I think the less regulation, the better for crypto at the end of the day. When you see the size of the offshore markets in the US, it really trumps anything that's going on in the US in terms of trading, etc. I'm not saying it can't change, but I think like the current administration has to do a lot in order for that to change. That being said, we only invest in the US. We're very bullish, the US, we're very bullish, the talent, the technical talent that's there in terms of creating the projects. After that, if the distribution is global, that's totally fine. But I think there's different jurisdictions for different kind of use cases, and not everyone is gonna be the leader in creating DeFi protocols. Not everyone is gonna be the leader in having the best exchanges. So I think the world is going to divide by specialty and by opportunities. I think the US is and I was talking this morning with Chris Giancarlo about this, the US is the largest capital markets, but it is not the largest crypto market. And so the issue with crypto is that liquidity attracts liquidity and is very sticky. And so wherever it goes, whichever region it goes to, then it'll stay. So it takes a lot to move.
Yeah.
So.
How much do you feel right now in terms of regulation change? How much do you feel is motivated by the desire for, so for example, as we're doing new regulatory frameworks to encourage onshore token developments and launches, how much of that do you feel is motivated in the form of ensuring that other countries are not extracting capital or liquidity from the United States per se, versus actually wanting innovation?
I think it's good that the U.S. stopped harassing, their citizens just because they're coding or things like that. So I think, now we're at the basic level. I think until the laws are enacted, no lawyer is going to tell a project, yes, please launch a token in the US. This is not happening. So until the law is changed and the regulatory regime that follows the law is changed, we're still going to be in an offshore market. That's the reality. And I wouldn't want any of my projects to take that risk because, as Jordi said, tomorrow we have another administration and the harassment continues. Yeah.
Very good. So we're nearing the conclusion of this panel. I'm fast forwarding to the tail end question that I want everybody to have a takeaway with is briefly from each of you, what single priority do you feel you would invest in or focus on to most effectively accelerate the on-chain economy? And Matt, do you want to take lead on starting that one?
I would say probably a standardization process for launches, vetting, et cetera, that allows us to cut the left tail off of these things, less rugs, more sophisticated ways to basically give these tools to everyone, some sort of stamp of approval, makes the investment process so much easier. It's one thing to explain that we bet on smart people and it didn't go well. It's another thing to explain to investors we bet on something that completely took all of our money and walked away. And I think that also ties in with regulation. If you have smart regulation, the left tail of the regulators being enforcement also kind of goes away. So it's a win-win.
Yeah, I mean, broken record, I think AI and crypto are the two defining technologies of this century. And I think for the on-chain economy to grow, it's really going to have to be through using a form of integration into like AI, whether it's through agents interacting with stable coins themselves or a lot of other ideas. I think that's going to be the next huge leap.
For me, I would say really increasing the robustness of DeFi and DeFi primitives so that they can become the backbone of the new financial systems and that they can be integrated with existing players.
I think just for us, I think it was all really well said. It would probably be having like seamless interoperability between the traditional financial system and the on-chain economy. I think there's no version of the world in which they're like purely bifurcated and like you just have the on-chain economy. I think for us, we're just of the view that they're going to be one and the same. And so like making that user experience identical across both and having very seamless transition from fiat rails to crypto rails and then crypto rails back to fiat rails. And then overweaving that with like localized experiences for different markets around the world is like what accelerates the on-chain economy. And so that's kind of how we're thinking about it.
Very good. Well, firstly, I just want to say thank you to each of you. You made my job incredibly easy today in terms of the content created. You guys were phenomenal in terms of all of your insights. This is probably my favorite panel. Let's give all of our panelists a round of applause for their time today. And I'd also like to thank the Injective people. This is an amazing venue, an amazing event. The love and care that was put into this was tremendous. And so a round of applause for Injective as well. Thank you very much, everyone.